Inflation is the highest it has been in our lifetimes. Prices are going through the roof, and because of the pandemic, money printing, wars, invasions, prices are just breaking record after record, and interest rates also as well are like 5 times higher than they were just at the same time last year. It just looks like the whole world is going upside down. In this happy and cheerful video, I'll give you first a status update on inflation in Denmark, and then I'll break down how much the cost of living has gone up for me specifically with like my own hard data, and then I'll outline some strategies and tactics on how you can cope yourself with the rising prices. For those of you who are new here, I am Mario. I have been living in Denmark for over 10 years, but I am originally from Argentina. And if there's one thing you should know about Argentina, besides football and so on, is that we have had between 20 and 50% inflation year on year for like most of my lifetime. Historically, like all the time. So again, this is sadly not a topic that is very new to me. So let's get into inflation in Denmark. Denmark's annual inflation rate is now 7.4%. So that's the inflation rate we had in May 2022 versus the same prices a year ago. And that's up from 6.7% just a month earlier. Just for perspective, this is the highest inflation rate Denmark has seen since May 1983. So we're talking a long time ago. To give a bit of perspective, food and non-alcoholic beverage prices are up 10%, the most in 2008. Housing and utilities are also over 10%, and restaurants and hotels are up 7%. Transport is up 13% and looks to be continuing climbing along with the oil price. Even interest rates on mortgages have been going crazy. So we are talking about 1% last year versus over 5% now for the 30-year deals. Again, big changes. And still, even then, Denmark's inflation numbers look really good in comparison with other European countries. So if you look into the Baltic countries, so Estonia, Latvia, Lithuania, who are also part of the Eurozone, these countries have had inflation between 15 and 20% year on year as of the moment I'm recording this video. And a lot of Central and Eastern European countries are also having a really hard time. Even Germany, which is famous for having low inflation, has higher inflation than Denmark has at the moment. So like, ouch. And this could very well turn worse before this gets better. So there's still a war in Ukraine, there's the European Union and Russia situation, which is very tricky considering Russia's role in Europe's energy mix and how much almost everything is linked to energy at one point or another. And then there's of course the COVID-0 policy in China that means that each time there's going to be a COVID case or something like that, there was going to be like supply chain situations in China that's going to impact prices as well. Still, despite all this, many economists expect that inflation will go away in autumn or when we get to next year. So for example, what Arbejdslandsbank, which is one of the big banks in Denmark, expects that inflation will decrease to just 4.5% by the end of this year and will move into just 3% by 2010. Again, like, take what the economists say normally with a grain of salt. Normally they are almost wrong, but no, that's some there are people thinking that this is going to go away. Still, as I said, things could go worse before it gets better. So Danes and people in Denmark, as the rest of Europe, we need to get used to being tightening our belts a little bit, because again, a lot of the inflation will come soon, as I'm going to show you in my example. Okay, I'll show you now my own finances. What you can see in this graph is how were my costs from January to the end of June in 2021, and the same cost January to end of June in 2022. You can see in housing, I went from spending 63,000 to spending 65,000, so it's just a 3% increase. This is driven by the IR foreigning, so the payments to this ownership association going up by around 3%. I expect gonna be a lot higher as we move into next year, but again, these payments to IR foreigning or a lot of things related to housing, sometimes like everything that is not spot comes with a bit of delay when it comes to price increases. This doesn't look so bad, but it's like a rental cost analog, so you can see, okay, not too much up, but it could go a lot further into the future. Now, when it comes to electricity, this is where we can see the biggest jump. In 2021, I spent around 3,000, just a bit under 3,000 for the first 6 months of last year. Then for this year, we spent 3,600. So that's a 20% increase, a bit more than 20% increase. And keep in mind, in 2022, I spent most of January traveling. So I was not at home, nobody was at home. And January normally is one of the months where you spend the most because you have a lot of lights on because it's really dark. So again, this number is even artificially low. So you could expect electricity gonna be like a huge change. And then when it comes to food and living expenses, it's not that we have the same diet each year on year, right? But like by and large, you can say that we still have a 6% increase in terms of groceries, and it's even more pronounced if you just look into June or May, like this year versus last year, it actually looks a lot worse than this. So it just that the first few months of the year were not that bad, but we already have almost a 6% increase in food and living expenses. On top of this, I had minor adjustments. I just not worth to put it here in kindergarten, but that's normal, like inflation adjustment versus the year before. But last year inflation was not that bad. Then we have a CASM, which is also slightly up. and we spend more money and pay better to our cleaner and babysitter, and also spend a tiny bit more on certain subscriptions that then have also gone up. But again, this is not really making a difference and it's not really impacting my life. One thing to note as well is that a lot of these kind of are set costs. The kindergarten will not just all of a sudden send you a massive bigger bill from one month to the other. Normally this has a bit of delayed, and it's not like electricity that are kind of spot prices that go, you know, a lot higher from month to month. So I expect that this will look a lot worse when we get to the second half of the year or when it comes to 2022 than they look at the moment. As you can see at the moment, it doesn't look like inflation is really tough and bad. But let me give you one example of how inflation is going to really kick in. And that is that I have two loans for my apartment, as you can see here. I have one loan that is a F5 and one loan that is a X30. The F5, it's bad timing for me, up for renegotiation in October. By the look of things, I'll go from paying 0.2% for, you know, this amount of money to paying 2.76. This is the expectation. You know, maybe it goes even more up, even goes more down. I can also change to different loans, but if I would keep the same setup as I have at the moment, this means in practice that I will be paying considerably more in interest. And as you can see in my calculations here, I made this whole model about this as well, which you can also get if you get in part of my bank negotiation course. You'll see that my cost will be for the whole family gross before, you know, tax deductions and so on and so on, 55,000 more per year, and that amounts to 1,500 more per month just on interest. This is serious money, even though of course after tax it's just 3,000, and if you divide by 2 it's just 1,500. This is serious money, and for nothing. It's not that I get a better service, I just get the same loan that I had before. Definitely something to keep in mind. Again, as I said, like I only pay this later, so it's something to keep in mind as well. Now, tips on how to cope with inflation. So the first thing you should know is that you shouldn't panic. I know for most of the developed world, for most of Europe, for most of the US, you know, inflation is a really new thing, but I can tell you with my whole experience growing up with inflation and living with inflation for many years, you'll be fine. You'll just need to adjust a little bit. And specifically the way to do this is, number one, cap your downside. So if you don't have one, build an emergency fund. So I suggest that you have at least 2 or 3 months of all your costs covered minimum. So just have that in cash in case you need it, because again, like when things go up and like the situation that you get a bit more tricky, it's always good to have that in place. Then as well, to cap your downside, if you're tight in money and losing your job can make or break the bank, you should definitely sign up to an EICASE, which is this unemployment insurances. I made a video over here where I explained the EICASE system. The gist of this is that if you expect to be unemployed for just a few months in a 5-year period, it actually makes financial sense to be part of the EICASE, even though it's expensive, because in the end of the day, being part of the EICASE covers your most severe tail risk big time. So again, from my side, if I would lose my job, it's not that the EICASE will be amazing, but it's still better than having to live from my savings. Just incredible peace of mind. And again, there's a link down in the video description to the EICASE that I recommend, and the one I have been using now for many years, almost since I graduated. Also, review your fixed cost, so especially your mortgage, if you can renegotiate that, car, if you have one, subscriptions, so if you have Netflix and Disney and HBO and Viaplay and so on, maybe you can cancel 1 or 2 for the time being. The idea is to keep your fixed costs as low as possible, at least until the storm passes. And then, of course, like always, if you are not too much into it yet, but you can definitely look into it more, is that look for discounts, look for deals, a lot more than you do normally. Again, if you're planning a big purchase, perhaps, you know, wait for that until you get the emergency fund in place, or until you have your, you know, fixed costs in place lower as well. Again, key, just kind of a housekeeping for the potentially worse times coming ahead. The second thing you should look is into growth opportunities. So I lost, on paper at least, when it comes to investments, over 200 or 300,000 just in the first, you know, 6 months of this year, which is, you know, very sad. But at the end of the day, like I still keep putting money each month into index funds. And I would say to you is that don't give up your investments because they are down. So take the Warren Buffett quote that invest when others are fearful. You know, that's a key as well. So just have a common sense as well. So for instance, I'm not putting more money into the crypto market in this context. You know, I'm still like saving, I'm building even a bigger emergency fund in place before I keep pumping even more money into index funds. But I still put each single month. And also, if you see that you're getting tight in a tight situation, you know, look for opportunities to earn more money. So there's, for instance, a ton of demand for Airbnb in a city like Copenhagen at the moment. Like, you have not tried it out, you know, try it out, rent your place out. And I have rented this house in the past as well. It's not that it's gonna make or break the bank, but it's, you know, gonna help out. And look also for opportunities to, you know, grow side gigs, grow new income streams. And you know, or for instance, that I work in Maersk, that's my primary and my biggest income. But I mean, this side hustle over here, it's kind of nice to have, and pays the bills for, you know, myself getting the gadgets and computers and all the things I like to get. So that's also nice over there, so I don't need to worry about that. Again, like I also made a video that's linked over here where I explain different ways that almost everyone can start a side business online. And the last point, and I think it's key as well, is that this is also a good opportunity to take a step back and invest in yourself. If the job market gets tighter and if things get a lot more complicated, it's really good that in a context like that, you keep investing in yourself and becoming more attractive in the labor pool. For instance, take courses to learn and improve yourself and become more attractive to employers. Depends, of course, on what is your area, but I mean, if it's finance, take finance courses. If it's marketing, take marketing courses. Or you can also, for instance, take my investment course or my productivity classes. There's definitely a lot more and a lot of material that's free out there. So again, if you don't even know how to code, you know, maybe it's something you can work on it as well. Last, in speaking about productivity, if you haven't done so yet, you should definitely check this video out where in over 20 minutes, I go deep diving into my whole productivity system that I use again to, you know, do job and side gig and kids and all that. Don't be afraid. Again, over the last 200 years or so, every single crisis ended, you know, with things getting better yet again. So, you know, just keep at it. Don't lose heart. Thanks for watching and talk to you again next week.